Unlock your potential with a comprehensive suite of investing tools and expert education with GammaEdge. Start your free 14-day trial today.
Everything here at GammaEdge starts with the tick, right? Everything starts with the tick. I want everybody to be clear of that. The market model. We did have a short-term trigger signal. Absolutely 100%. That was undeniable. The key to this is that it was a 0DT or 1 to 3 day trigger signal, as we posted here or discussed here. TC8, TC10. Make sure you look at those commentaries and understand those. But aggregate market model, short-term bullish remains longer-term bearish. Rallies are prone to failure in this condition. Okay, so I know we had fun with the prone to failure statement, but it is seriously key when you're looking at a market that's been in a significant downtrend. Tick has been a significant downtrend and it's trying to go through a state change, right? We've had multiple state changes. We can scroll back. This is the TradeStation tick here, ARCX. We can scroll back. We've had multiple state changes and failures within the past month and a half, 2 months, where we've tried to move up, couldn't move up, we failed really almost the next day. So history from looking at that is it's going to be highly prone to failure when you're trying to, I say turn the Titanic, but when you're trying to make a true trend change, okay? But the significance is that the long-term market model, the red below cyan, is in a severe negative slope. So it's not going to turn 1 day. It's not going to turn 3 days. It's probably going to take 5 to 7 days. So if you're looking to do short-term trading, then absolutely. If you get a trigger signal and you want to try something on the long side, but you need to understand that your time frame is going to have to be very, very short, right? And so this is where progressive exposure comes in. Start small. Start a quarter of your normal position size, and then add on if it starts going your direction. But if it fails, like the next day, then you've only risked a quarter of your total position size that you want. If it goes in your direction and you're up a few percent at the end of the day and tick looks like it's going railroad track up, then add to that position towards the end of the day if you can, or on the next day open, right? But, you know, again, it's highly prone to failure. The other thing is looking at the overall structure. The AM, I don't know if I have PBI charts on here. I went through it in the morning call. Obviously, we were call dominated. Definitely. PM settled was call dominated. 0DT, call dominated, right? We knew we were having a large expiry. 1DT looked actually like it repaired itself, looked pretty decent. Somebody's mic saw it. Okay. Next week, this was actually a Friday, right? Call dominated, looked pretty decent. Calls to the upside. The only thing that was, this is the combo, looked decent, call dominated. The only thing was the one of the structures, I can't remember which one we were looking at. I think it was the AM settled, obviously was going to come off. It was a stalemate, right? So we knew that was going to happen. Thought, well, that's probably what was going to happen. Did we expect the anticipated selling that we got? No, at least I didn't. Maybe Paul will allude to this. I didn't expect us to have that much selling, but I was in the prone to failure looking state because of the tick. And everything starts with the tick for me. And I know I pounded it last week and I continue to say it, but the structure looked good, but the tick still was not good. We were, long-term market model remained bearish, short-term was bullish. And so for me, I was positioned very, very light at all, really, moving into OPEX, and OPEX is increased volatility. We've seen that over and over. For me, I didn't trade on Friday, but I usually don't trade the OPEX days, just because it's usually increased volatility. It's hard to get direction. So that's my post-mortem blend. Heading into it. And so next week I will go into it with the same mindset. I will be looking at the tick, and if the tick is risk off, then I will not be putting on any longs whatsoever. I think I cautioned everybody last week about longs multiple times, I think when Paul was gone and came back. But that's how I look at the market structure, right? We can be call dominated, right? Anticipation is that calls are building up and out. We can have the structure below us that's supportive with puts, as in pullbacks, looking for demand levels. But if the tick is not corresponding to what we're seeing, then it's just a risk-off environment. And the filtered tick, let me open this. Sorry, I should have had this up. But the filter tick was, it was not great.
It was down Friday every time.
Yeah, it was down Friday. And then the day that we moved up, it was not great either, right? And you could nitpick. Again, this is hindsight. it was up. Don't get me wrong, but new lows were still outpacing new highs. Cumulative tick was not that strong. I mean, it's 80,000. Filter tick was 20,000. I mean, yes, it's up, but new lows are still outpacing new highs. And again, we're under the ribbon and it's prone to failure. So I hope nobody went extremely long, and got sucked in and got hurt on that. But yeah, that's my takeaway. So yeah, everything starts with tick. So I would encourage everybody to understand the tick. That tick is the instantaneous momentum, buying and selling of what's going on in the market. So yeah.
Hey, Mike, let's say you did have a bullish bias, just asking for a friend. And what would you be tracking in the early session to tell you that? I mean, I know you guys had failure, levels like 44.85, whatnot, which I was watching and I was fine. But what would you be watching early in the session? Vol-D, Vol-U, zero DTE, wing charts. Like, can you kind of show me what would you be watching other than your levels that I know you follow to tell you based on gamma? Okay, this is starting to go bad.
Yeah,
I can take it, or you can take it, Mike. I don't care.
I'll give you a simple one right off the bat. Right off the bat, we gap down below transition level. So, I mean, we know the importance of transition level, living below the transition level. That's a quick, simple filter for myself that I personally used on Friday, was saying, okay, gap down below transition, the tick is likely to flip lower now on an intraday basis. So that is just something, that simple kind of system that I use for myself.
Yeah, I like that. So the other thing, Lynn, that I posted in there is liquidity list. That is my go-to market breadth indicator. We can do all the market breadth indicators you want. I mean, we could look at new highs versus new lows, but that liquidity list is the top weighted stocks, top of the SPX. And if those stocks are just getting destroyed, the market has to go down. It's just mechanical. I've done it for the past 5 to 7 years, 10 years. I used to just watch the top 8 or 10. I've expanded it out to the liquidity list. But if those stocks are going down, there's no possible way the market can go up for a sustained amount of time, right? So that's what I would be personally watching. So I'd be watching the tick, the filter tick. I would be watching the Vol-D command, but just instantaneous, I'd be watching the sectors and the liquidity list. If the defensive sectors are leading, then the market is really not going to go up. If IWM's been broken. If IWM is going down and small caps are going down, we can have a divergence, but it's still going to be hard. And watch those risk on sectors, right? So the risk on obviously is the high beta stocks, AMD, Nvidia, Meta, Amazon, Netflix. I mean, if those stocks are not going up, it's going to be really difficult for the market to go up. And if those stocks are getting extremely sold, those are institutional stocks. And institutional selling is happening. If those stocks are getting sold, there's really no way around it. So, and those institutional stocks are in mutual funds. They're in everything across. Dealers hedge with those. So we know that if those stocks are not acting well, the market just can't go up. So that's just a quick glance to look at. And I look at those all the time. So Paul's ready to talk. I can tell he's going live.
Well, we talked about it live in voice. I think there's a couple things. I mean, I echo everything that's been said by Taylor and Mike. I think, we noticed this. So on my screen right now that I'm sharing are the futures. This is the December contract. Last week was the roll week. So by Friday, majority of the roll is completed, and you can use the December contract as your bogey now. Now, there's a lot of separation between what the ES is showing and what the SPX is, but there's a couple of important things that I think are important. We noted this, literally this sell-off right before the open. This vertical line right here is the 9:30 a.m. open line. And this is the previous close right here for the ES. And so we had failed to get up above that, and then we just collapsed. So that set a tone for the day where we were not, in a perfect world. We posted this out on Twitter and here in the forum. In a perfect world, if price were unchanged from the previous day, there would be no big impact. this signal, which is the instantaneous CT, that's a linear down signal. And the fact that it started right at the open where it was, and it never even tried to recover, none of us here have to be, confused what's going on. This is telling you got a problem. The next thing, obviously, when the railroad track, well, maybe not obvious, but when the railroad track starts crossing itself, anything that you got into in the long, if your time frame is short, which it should have been because this is a 0 DTE type of signal, 0 to 1 day swing signal, you should have gotten out if you're on the long side. And the ARCX was telling us of that weakness right at 10:26 Eastern time, and then you can see you just got confirmation, and then by 13:30 or so Eastern time, you've got a confirmation of the railroad track down, but you've already lost the CT, you lost that on the railroad track at 11 o'clock, but the fact that it never even tried to come back at all. And then everything Mike just said, right? We've got breadth, which has been sucking a goose egg. You've got, this serious adjustment here where everybody, and this is the RSP, this is the equal weight, everybody was getting out, right? This is massive urgency. This is massive urgency. Look at it. These are selling programs that are lasting longer than a minute, right? And they're moving a lot of ticks. There's a lot of transactions that are pushing things down. So pulling this back into, we were long going into the morning. I bought P-Trans to PGEX. I bought some 0 to P-Trans stocks. I did squeak out a slight profit on Friday, but I am seriously sitting on a bunch of red going into tomorrow. And, that's part of the P-Trans to PGEX strategy is that, we entered long and the prices pulled back. So, of course, they're going to be red. But I think there was no early indication, the RSP here actually, which is the equal weight, actually looked pretty darn good. And I said that in the morning session, by the way, whereas you didn't see that here on the SPX. You didn't see that strength, which tells you the underlying, in hindsight, is telling you the underlying. I didn't say that Friday. All I pointed out was that the RSP was looking better as an equal weight, which, this is almost a gap fill, right? So this is actually looking pretty darn good, and then he gave it all up. And then we had that adjustment. We lost the CT. This is the USC view here. And then from that view, and Plastic said something. There were others in the forum who were, or in voice that were saying, this is a shit show. And it frankly, it undid what all the progress that we made on Thursday. Very strong signal. I don't know what to say except what Mike was saying. You take the signals, you don't get out over your ski tips. If they reverse, you get out. I don't know if Valdi would have necessarily been the only thing, but I think there was a confluence of things that probably made it pretty apparent that things were going to get weaker as we went through the day. And then, like I said, we commented on these adjustments when they occurred. And, basically we were saying, well, that's a pretty bad scenario. And we did talk about this. The Qs just rolled over and were linear down, right? So you had this divergence in price, but people were selling the Qs. And then you go look at the Russell. Russell was down. We had this adjustment. We had slight recovery. So we'll see what happens with the Russell as we go forward here. But everything's down.